Hi, welcome to my channel. If you like the content, please like, subscribe, and turn on the post notification bell so you'll be notified when I post this crazy content on these crazy topics that goes on here domestically in the United States as well as abroad across the world. It's just very interesting to me. But today, I want to get into what would trigger a US or a China housing crisis. Now, these are two individual systems, of course, and I'm going to give like a little brief explanation of how each system works. Now, a lot of people ask which bubble will pop first, China or the United States. No one really knows that. But what we all can agree on is both bubbles are inflated to the point where something has to give. Everything is over leveraged, over borrowed, overpriced. Something has to trigger it. Something's going to pop it. No one knows what's going to pop it, but like I said, we all know that there's multiple bubbles inside of each one. So China has multiple bubbles within its system. The United States has multiple bubbles within its system. And if any one of those fragile bubbles pop, it could pop the whole entire thing. And no one wants either one of these scenarios to happen, but it's almost inevitable when you look at the numbers and you look at how everything is moving. It's kind of like it's real scary, but I guess they say sometimes that this could be necessary for a great global reset or, flushing out things in the system that need to go, all the negative things, right? But what a tragic way to go. But like I said, each system has multiple bubbles. Now, the United States, we're going to lead off with the mortgage bubble in the United States. In 2008, that triggered the financial crisis within the banking system when the banks loaned out all these subprime mortgages. They loaned them to people who didn't have a job, people who were new on their job, no job security. Didn't matter. The banks lowered the requirements for people to buy homes. People bought homes, no questions asked, got the homes. The homes were on adjusted rates, some for 4 5 years, and when at the end of that 5 years that rate adjusts to a higher rate, most people were impoverished people who bit that apple, and they did. If your rate adjusts from, let's say you're paying $1,500 a month for your mortgage, and at the end of your 5 years the interest rate is up, you pay a higher rate, and now your mortgage doubles from 1,500 to 13 to 3,000. Now you cannot afford that mortgage. You knew in your head you could barely make the 1,500, but now the 5 years is up. Now your mortgage is about to double to $3,000 and you cannot afford to pay that. That's the negative of having an adjustable rate for your mortgage. Most people go with fixed rates to lock in those rates for the 30-year term. They even got 40-year terms now. But this is how the US mortgage system works, right? And then you have average retail buyers like myself who'll go in and buy homes on the market, and that's fine, right? You have whole companies. They've built whole companies on buying real estate and renting that real estate out to regular citizens. And then they take their profit, put it in a big pool, and pay all their shareholders. It's amazing. Listed companies on the stock exchange gain more money, buy up more properties. You have the average US home buyer, us millennials and whatnot. We're competing with all these large corporations who are coming through buying up all of these single family homes throughout the US. The US only produces so many homes per year. And if the companies are buying all of those, like, who are we really competing with? But those companies saw that as a way to get into the real estate market and make money real quick. Now, I just mentioned the subprime loans triggered when people couldn't pay their mortgages. When that rate adjusted, it triggered the 2008 financial crisis. The banks couldn't get the money back. The banks then sold the mortgage backed securities, bundled up a whole bunch of good loans with bad loans, the subprime loans, and sold them to across the world. People bought into them. And when people couldn't get that money back, it all crashed. But they found a new way to do things. Not only are they packaging auto loans like that now, like they did subprime mortgages back in 2008. Yeah, they didn't learn a lesson. They just moved into a different industry. Car loans, packaging good loans with bad car loans and selling them just like they did mortgage backed securities. But they've been unregulated and unchecked for so long, and they don't learn their lesson because they keep getting bailed out by the taxpayers, right? And then you have these special programs called, I said how we compete regular renters and regular prospective home buyers have to compete with these large publicly traded companies to put a bid in on a home. You also have these programs called iBuy programs, like an iPhone, except it's iBuy, right? Now, you have companies like Zillow, Redfin, what is it, Open Door, all of these companies, right? Where an average person like myself will say, I want to buy a home. You look for the nearest app where you go search homes at ease, right? I like Zillow. I like all of those companies. They're pretty cool. But the thing is, those companies have a lot of data when it comes to knowing a lot about the United States real estate market. So they drew up a bright idea and said, let's create this iBuy program where we too are going to go buy up all of these single family homes across America. We're going to renovate them so people could come. They basically buy the homes off the sellers over market value, might I say. And then they renovate it. People walk in, buy the property turnkey, except you're buying at an inflated rate because they have to make their money back in profit. But the tricky little part about that, when 2020 came around and the market, the overall stock market started dropping, those companies that I mentioned, they start panicking, the Zillows. And Zillow, I believe, was the first one. They tried to unload their portfolio. They said, we're canceling our iBuy program. We're out the business. We're going to sell all our portfolio. And everybody's like, whoa, wait, what happened? Is this the sign that the market is going down? It's about to happen? Did the bubble all the way burst? It's still been prompted up. But the little tricky part about real estate is not when the market is crashing, it's not easy to get off real estate. Real estate selling is a process, and they have all this inventory on hand and they can't sell it all. And all of them start panicking and canceling iBuy programs. So you're competing with the large corporations, and you're competing when you see those listings on Zillow, you're getting it way above the price is astronomical because Zillow has to get its profit because they renovated it for you. All you need is turnkey. You don't have to do anything. Just walk in the house, start pulling out your furniture out the boxes. You don't even need to wipe nothing down. Here you go. That's what they promised through the iBuy program. The house already been inspected. We bought it. They bought it from the original seller, and now they're selling it. It's a whole trick. But that's a bubble within itself in the United States. And then you have student loans. The government subsidized all of those loans, meaning students go and get these interest-free, interest paid by the government, subsidized by the government. That's a $1.7 trillion bubble. That could pop at any given moment. If students start defaulting on that, that could trigger a housing crisis or any other bubble popping. Credit card. Credit card is up there. That debt is crazy. That's tied to the inflation, high interest rates, right? Auto loans. Yo, The average auto loan in America is like $700 to $1,000 a month. That's minus maintenance, gas, power charging, whatever you rocking with, right? Insurance, minus all of that. The average car note is $7 to $1,000. Tell me that's not a bubble in itself. And I told you they packaging that up like they're doing. They did the subprime mortgages. They know people are not going to be able to pay them inflated prices, them inflated notes. At some point, something's got to give, especially when unemployment kick in, when jobs start, because companies are quietly they firing left and right. Then that triggers foreclosures, evictions, everything. People can't pay their mortgage, people can't pay their rent, and then that affects the banks, right? Now you're talking about triggering another financial crisis that we technically never really got out of from 2008. They just kind of prompted up the market with printing money, hoping that it'll stay steady and not crash on their watch. But at some point, it's going to have to crash. It's too much spending. It's too much debt. It's too much leverage in the economy. Everybody moving on debt. At some point, that system is so fragile. But that's the same system that China lends itself to, except real estate is like the number one. We have different investment vehicles that we trust a lot more here in the US because it's regulated. In China, they don't have those luxuries. They don't trust the Hong Kong Stock Exchange or the Beijing Stock Exchange. They've lost money every time they did it, so they don't trust it. Businesses, Chinese government could wake up tomorrow and say this industry is dead and that whole sector gone overnight. So they don't trust investing in businesses. So the only investment tool they have is in China is home ownership. And we're not talking big old single families, we talking tall apartment complexes as far as the eyes can see, right? But those are their investment vehicles. The Chinese banks did the same thing. They relaxed the policies. And now China, instead of working off of credit here and credit and a job, your debt income ratio, right? No, in China, all you need is a job. If you could pull together enough family members and all of y'all have jobs, there's no credit rating like a FICO score that they use in China. They go by if you have a job, then you could get the loan. And they get pre-sold homes that are not even built yet. That's a Ponzi scheme in itself. Give one more investor in, five more investors in, let's keep this going. And they all giving money up front and don't have any product. They say come back in 2 years, your home will be built. And they come back in 2 years and it's not built. That's why they protesting right now, threatening defaults. Now, if the developers in China default, they leased that land from the Chinese government for 70 years, the developers. They don't own that land. Chinese people can't own land. That's why they go abroad and buy land where they can own it. China, you can't own it. It's all state owned land. The developers lease that. And when the developers can't move and borrow, that means all of the down chain businesses like the cement providers, the lumber providers, the roofers, the everything, they none of them getting paid. If Evergrande, the developers aren't getting paid, the giants, when they freeze, the whole industry freezes down the way, down to the people who provide the steel, the pipes, everything. But when that triggers, it triggers because people are threatening to not pay their mortgage. That's what China is up against right now. And if that cracks or the United States cracks, both of them are intermingled together. It's all fragile. It's all going to go. And lockdowns in China, everything is just, it's too much. But those are the two differences between the systems. And if either one of those bubbles pop, we're all in trouble. We're talking 2008, but worse. And not a lot of people understand that that's going to happen and it's inevitable. The Chinese government is trying to stop it. The US government is trying to stop it. But how far can they kick the can down the road before everything pops? And then the citizens pay the price, right? As always. But I'll be here. I love this stuff. I'll be here watching and I'll be here talking to you guys. So until next time, I'll talk to you guys later. Bye.